And that means we are live here on our YouTube channel, Tackle Trading's Halftime Report, our daily stock market show where we go through the news, the charts, the information, anything on our mind that we want to kind of communicate with you guys out there, our team. And we have some fun while we're doing it. We've got a full show here today. We got earnings roundup. We've got more stimulus conversation. Actually, some of the earnings stocks, quite frankly, were a little bit of a boring, muted response, but we still got earnings previews on some of the big names out there in the market. We'll digest it all. Blast from the past, actually, Kodak. I don't know if you guys remember that company, Kodak, the famous, camera company, back in the news here today with kind of an oddball one. And Netflix actually scooping up the most Emmy nominations out of anybody that I saw out there. We'll talk a little bit about all those things. We got a full crew here today. We've got Matt, we've got Mark, and we've got Cody. Matt, how are you doing, sir?
Tim, I'm doing absolutely fantastic. I'm excited to be here with the crew for the report today and to break down the news of the day.
Yeah, there's some news that's grabbing my attention, other news that's not so much. I think really the big 2 days are going to be in front of us. Wednesday and Thursday, we got the FOMC meeting starting today, and then any policy changes. We'll talk a little bit about that today. Will be tomorrow. But then the big earnings on Thursday as well. Still going to be a jam-packed week, but not much going on in the price section. By the way, if you're out there and you're watching right now, smash the subscribe button for me. We're literally like 2 subscribers away from our 10K mark. We'd love to hit that live during our show. That would be fantastic. And if you are Team Tackle, give me a thumbs up, hashtag Team Tackle in the chat as we get going. First things first, Matt, let's just talk about technicals here. Little inside candle, little red candle there, just sitting on the 9 EMA. What are you seeing on the S&P?
Just a little bit of hesitation candle in front of what could be a very important, let me reiterate, a not very important Fed announcement of being very, very dovish and more dovish, and then who can be even the biggest dove. So we're going to play who's the biggest dove
Utah homeowners
over the next 24 hours. So I think it's just a little bit of a hesitation, a lot of news here today. And so a little bit of a wait and see with the Fed coming up, a little bit of wait and see with how the Democrats are going to respond to the Senate plan coming out of the Republicans regarding stimulus. So I think there's a little bit of a wait and see approach here in the market today.
Marky, what is going on with the stimulus? Obviously, that's the major conversation the last couple of days as the Republicans and the White House are coming up with the proposal that they want to put out there. I believe they did get some details out to the market and to the public. Mark, what is happening with stimulus right now?
All right, so Republicans have their plan out. Here are just some of the key differences between Republicans and Democrats. Both are up for sending a stimulus check. Some minor things, but they both are going to. Also, as long as the deal gets done, stimulus money is on the way, as long as you don't make over $75,000. And then
now, Mark, I didn't see that. I got a question on that. Is because the limitations on the previous one were, and it's like 90,000 versus like 170,000 or 150,000 on joint. Is that the same kind of parameters we're looking
Republicans, starting at 75 and 150 for married couples. Democrats, 75 and married couples 150. So
it's pretty much the same thing on the max level.
That is not an issue. They both sides are on board.
All right, so the $1,200 is like, and that's like both agree on the $1,200 stimulus. Okay.
Essentially, there's some minor quibble points, but nothing that wouldn't get done within 24 hours if they wanted to. Republicans have more money for small businesses, fewer than 300 employees, and have lost at least 50% of their revenue would qualify. Democrats didn't originally include that in their bill, but have said basically they would agree with that as well. The sticking education as well. Republicans 105 for education funds. Democrats 100 billion, which would 90 billion would go to states to be split between K-12 and higher education. Some minor quibbles, not a big deal. Where the debate is going to come down is a three-prong approach. One is the actual unemployment benefits. Republicans are cutting benefits to $200, and until the states have a chance to implement a system that replaces 70% of laid off workers' wages. That would go through December 31st. Democrats want the $600 enhanced unemployment benefits extended, and this could be a sticking point between them. Perhaps some of the bigger sticking points have to do with liability protections, which Republicans are adamant for, Democrats are completely opposed to. Instead, they say they want to require new regulations from the Occupational Safety and Health Administration that would have employers create new plans to protect workers. So they're on real opposite sides on the liability protections. And the liability protections going back 3-4 months has been a huge talking point. Back in May, back in April, after the first bill was passed, Mitch McConnell was very clear that there would be no bill without liability protections. And so this has been a multi-month talking point. Also, where they are far apart is the amount of funding to go to states. The Democrats' original bill provided $500 billion to states and $375 billion to local governments. The Republican bill included nothing. I think the states get a attaboy card to be delivered on a future holiday. Don't want to give that. So here the political theater starts. There's some common ground, and there's some ground that there is a light years apart. Now, if this wasn't an election year, I'd be like, whoa, this thing might not even get passed, period. But it is an election year, just a couple months away. And it just comes down to politics, who plays it better, how bad do they really want to pass a bill? And these are the things that we're going to have to wait to find out.
Do you think
Well,
that
and I just want to make one point on that. I talked about it in the podcast a little bit. I agree with the election year comment, Mark. If this was not an election year, you would probably have a big battle on your hands here. But when you're sitting in a situation where the Democrats are most likely going to control the House, and the presidency, will just call that up for grabs right now because we still got a lot of time going into that final election there. But you got 6 Republican senators that are in a toss-up situation right now, and they currently control the Senate with the 53-47 majority. That could flip, guys. That could flip. And I think the Republicans are coming into this a little bit with some weakness because of those polls in some of those battleground states that have not been very good for down party Republicans right now. So it's going to be a fascinating political theater over the next week, Mark. There's going to be a lot of words thrown out. Pelosi, I believe today, started her comments by saying the Republican plan was pathetic. But then she said, having said that, we were going to see if we can find some common ground. Schumer called the $200 plan a non-starter. You're going to see that on both sides of the equation. But based on what you've been seeing in the last 24 hours, has that changed your opinion that a deal ultimately will get done here?
I can't see, once again, unless I can see this getting drug out longer than one of the parties wants, because maybe the Republicans, maybe the Democrats, I don't know, want to read the tea leaves in polling and how it plays out in the polling, who has a strategic benefit. But unless somebody has calculated and said, no, stalling out this bill is our calculated attempt in the election season because we think it benefits us, unless that is going on, everybody's on board with, if you don't get a stimulus bill passed, there's a lot of short-term pain. Now, maybe we should take some short-term pain as a society, to not have mounting deficits, but that's not ever going to be the reason it doesn't get passed, right?
I hope there's no politician in America, and I know this is idealistic, but I hope there's no politician in America trying to play the blame game here. Right? Let's come together. Let's lock them in a room. Let's negotiate. Let's come up with a plan. But I hope there's no politician waiting to say, okay, let's hold out on the American people so that we can potentially play political games. I hope that's not the case.
Well, then you have far more
optimism. I know. I'm idealistic
about your elected officials than I do.
I get that.
Both parties are full of scumbags. So
I still maintain that a deal's going to get done here. I think there's enough common ground that they can negotiate on the liability insurance and the $200 to $600, additional unemployment benefits. But as a society, don't we have to curtail that at some point?
Yes, not even a debate.
Don't we
Yes.
have to wean people off the free government teat at some point?
Yeah, incentivize them to get back to work and all that kind of stuff. 100%. Yeah.
Okay. And so at some point, we have to start having that conversation. And there's never going to be a good time to pull money from consumers politically. That's never a winning thing for a politician. But at some point, you got to stand up and do what's right for America. And for me, anyways, I think the Republicans got to hold out a little bit on curtailing and tapering those unemployment benefits. Even if they don't get their 200, even cut it down to 400, and then in 6 months cut it down to 200. I don't know what the plan is. I'm not the paid politician here.
I like the 70% plan they originally talked about, by the way. I think that makes a lot of sense to me. I mean, a portion of whatever your income was that you've lost to make sure that the Fed comes in and steps in. But I guess there's some logistical problems with that, is what I'm understanding. They can't just do that right away because it would be just a nightmare. But even with this bridge of the 200 mark, don't they convert to 70% in like 2 months or 3 months or something?
Well, the Republicans do that, but the Republicans are doing that at the state level. If what I read was correct, is that they plan on turning that over to the state to take care of that 70% unemployment wage gap. So that's going to be a talking point between a difference of opinion in the Democrat versus the Republican plan. But at the end of the day, I mean, I agree with Pelosi in the sense that not calling it pathetic, it's a plan, but saying that there is enough common ground there to start the negotiations and the discussions. And even though there's going to be a lot of, harsh language thrown out over the next week, I still maintain that a deal is going to get done here.
Is there one issue on the Democratic side, Mark, that would be a non-starter for the Republicans? Is there one item, one thing that they're going to want that what Republicans will basically say, hell no, we're not doing it?
Well, I think it's the state and local funding. Not only is there a massive gap in the total money, I mean, you're talking close to $1 trillion versus zero. That seems to be, from the White House standpoint, no, they don't get any money. I mean, Mnuchin came out, Meadows came out. Baghdad Bob probably came out in a slobbering, say whatever he needs to say as well. And they were very adamant about states. We're not bailing out states. So that seems to be one of those dig in areas. I don't know if it's a non-starter, but that seems to be one of the biggest bridge gaps. I think the $600 a week versus $200 a week, that seems like a compromise can be made.
Got it. How about 400?
Yeah, 325, 350, like that seems like an easy. Hey,
find the mid. Every negotiation, find the mid.
It's pretty simple.
I think it's liability protection and state funding are the only way that this deal goes to war over. Because liability protection is a huge thing. Democrats want to say no, we want to protect workers. And Republicans are saying, no, we need to give businesses, universities, everything liability protect. That's a massive gap, and that's a political gap. So those two issues, if this thing goes south in the short term, those are the two issues that are likely it is over.
Well, I mean, those states' rights, Mark, I mean, that goes to the heart of political differences that go back 233 years now.
Well, and also, do you protect workers or businesses, right, or both, or some middle ground? But it does seem like they're having a conversation. We've got proposals now from the Republicans, and they're moving that forward. I think that's going to be an ongoing discussion here for a bit. And I do believe, same tone we had on the podcast. I think a deal will get done at some point, and they'll find a way to do it.
There's just too much to lose on both the Democrat and the Republican side to not get a deal done right now.
I agree with that. Markets are not really moving much here on any of the news, quite frankly. We've got inside candles across the board. Dow, S&P, NASDAQ, and the Russell all kind of hesitating here, Matt. I am not seeing much in terms of those broad indexes right now. We do have earnings roundup we're going to get to a little bit later in the show. Are you seeing anything in these charts, Matt, that you want to highlight?
No, the news can give you such a false sense before you read the market. And I did my routine as I always do, and I always go through just a crash course in the news first, just to kind of understand kind of what the market is focused on here today. And I was expecting a little bit more movement in the market when the cash open occurred. You know, you were down a little bit coming into that. Market tried to poke its head right above that high from yesterday, got beat back down a little bit. But no, all I'm seeing here is a little bit of hesitation in front of some major news events. This is not abnormal for the market in front of a Fed meeting. That a lot of times the market wants to take a little bit of a breather, wait for the Fed to announce what they're going to. You got the political situations going on right now. So, like I said at the first and halftime report, I'll maintain it here right now. It's just a little bit of a hesitation in front of some major news, but not only that, you got major earnings coming up too. And so, whereas you did have quite a bit of earnings news just earlier today, but what was the companies reporting earnings today?
Well, you had NOV, National Oil Well, CRISPR, Ecolab, Cummins, McDonald's, Pfizer, Altria, Raytheon, Yandex. So some names, but we're not talking the apples and the apples ones.
Right?
Yeah.
There's some names, and those names like Pfizer, that's a big name, no doubt about that. McDonald's, big name. Altria, big name. 3M, Hog, those can be really, really big names. But are they anything that approaches what we're coming up, later tonight with a Visa? A Visa tonight is far more important, in my opinion, than what we're seeing here today. But it's really tomorrow when we start getting those major reports. You got Facebook coming in tomorrow as well. You have PayPal, you have Shopify, you have Boeing coming in tomorrow. On Thursday, you have the Apples and the Googles of the world. So I just honestly, it's a Tuesday before the Fed. You just unveiled the Republican plan that we already had the parameters on. Like, Mark, was there anything in the Republican plan unveiled in the last 24 hours that we really didn't already know as of Friday of last week?
No,
there wasn't any substantial changes.
Republicans have telegraphed their things and they've communicated to the market and the powers that be very well. Not a single surprise in the plan.
Yeah, there wasn't one surprise. So there was nothing really we saw. So I just think that, Tim, in front of the Fed, in front of these major earnings, and in front of a political showdown, I think the market's just in a wait and see approach right now.
We've got to take a moment here. We just hit our 10K mark. I know it's an arbitrary measure, but it's something we've been talking about here internally for quite some time. And Matt, 10,000 subs, is pretty cool. Light day in the market, not a lot going on, but exciting day for us here. That is a milestone, no doubt about it.
Oh, we'll make up some other arbitrary number to target the same way everybody else does. But we started this YouTube channel just really a couple years ago. Really started, putting effort into it and grew it through word of mouth organically. And, we're very, very happy about the 10,000. We're so happy that we have a great community that comes on, and watches the show and enjoys what we do on YouTube. And, we're going to keep on doing it. And like we promised, once we get that 10K, we're going to do a special event, most likely next Wednesday or the Wednesday after that. We'll have some more announcements coming up soon. So, just happy, and a big shout out to Team Tackle. Big shout out to the halftime crew. You guys are amazing. We love you guys, and we hope you enjoy the content we put out there. And every now and then we'll say something that offends somebody. We try not to. That's never intentional. We just try to be us, and sometimes we're off the cuff and say some things. But we love our team, we love our community, and we're very happy that we bring some value to them every day.
Very, very cool. Yeah, I'm excited about it. And more announcements to come on what we're going to do to celebrate that as we get details on that plan and whatnot. Back on the markets here for a minute. There's only really one economic report that came out today, Matt, that grabbed my attention. The consumer confidence number. It came in and it fell a little bit below the forecast and the previous one, but there's not much there. That really didn't move the market at all. The FOMC tomorrow obviously will or can have an impact on the market. I am very hesitant to say it will have an impact on the market because I don't think it will. I don't know what the Fed is going to do. We'll talk about that here when we get into the dollar, but there's not a lot of market drivers here today with what you're saying, even on the earnings front. Yes, some of those companies, interesting. Well, they're noteworthy. We'll take a look at
They're not drivers.
They're not drivers.
They're not drivers. Pfizer, an important report for Pfizer, but it's not It's not a market driver. McDonald's, it's not a market driver. These value type stocks that we're looking at, I mean, honestly, the question coming into earnings season was, do they have a heartbeat? It wasn't if they're going to drive the market. It wasn't if they're going to, tank the market. I didn't really think it was going to have that big of an impact on the market. But so those are the names you're really seeing here today.
Yeah, today's your grandpa's earnings day.
Yeah.
Thursday for all you young whippersnapper. Like, listen, like it just depends. Like McDonald's, Pfizer, Altria, these are three companies I follow every day. So I love today, but once again, I'm almost qualifying for an AARP card. So like, it's what it is.
Yeah.
What age do you have to be to get that card, Mark?
I think 55, right?
I'm only a few years away.
I think 55.
And if you don't think I'm signing up for those benefits,
damn straight.
I will have that form filled out well ahead of time. So I can.
Mark, I think you already have the form filled out years in advance, preparing for this moment.
If you don't think I've been waiting for my 10% discount at the buffet, you guys don't know me at all. So
does McDonald's give you a 10% off food?
Yes, they don't, but hey, what do you do? We'll talk McDonald's here in a second. I got some thoughts on it.
Yeah, let's flash through the commodity market here, guys. As stock market kind of light day here today. Crude oil back on that chart for just 1 second, if we can. The chart hasn't changed, and when it changes, we will let you know. Mark, is there any change in any of the news, the fundamentals that you've seen?
Is that 20-day moving average still holding?
It's holding.
The one thing out of the only extra commentary I have on oil today is that I'm hearing increasing chatter about oil as an inflationary hedge. There's a lot of hyperinflation scenarios out there. More than ever. We'll get into this in the dollar. I don't know if you guys saw what Goldman said about the dollar.
Yeah, I saw what Goldman said about the dollar.
We're going to talk about that here in a second, but there's more and more people saying that because people have been speculating, why in the world is oil doing what it's doing? Basically nothing. Why is it holding such a tight? And people are like, a lot of people out there place an inflationary bet on oil. They think it could be the next run up that you see. Now, I'm not in that camp, but I thought it was worth passing on.
Well, I mean, but
the evidence of oil being an inflationary product is not very good.
No, but it's 2020, right? Like, man, heck, we're just making stuff up as we go.
Like in the last week, I've been hearing how silver's an inflationary product, and that's why it's going up.
People are panicking about inflation. I do know that for 100% certainty.
And they should be. They should be. I'm very, very nervous about inflation. There is ample evidence of why people should be concerned about inflation. That's why gold is that instrument you want to own. It doesn't mean you make more money, by the way. That's not what gold ownership means. Just because gold's going up doesn't mean you make more money. It means you have more gold to protect your currency devaluation. That's what it means. That's why it's an inflationary protection mechanism, because it protects currency. It doesn't mean you make more currency because the net value of the dollar goes down, the net value of gold goes up. You basically offset inflation is what you do. That's not the argument you can make in crude oil. That's not the argument you can make in platinum, palladium, natural gas. That is not the argument you can make in any commodity, including soybeans, corn, and wheat, which are your food-based groups. Mm-hmm. You can't make the inflationary argument any longer in any commodity not named gold. Gold is the only commodity that is inflationary protection in the futures market, in my opinion.
Hey, listen, I always wondered what it would be like to trade in the Weimar Republic days. We might have a chance to find out in the coming years. So
that's a scary thought. Speaking of scary thoughts and a natural transition here, bring up the dollar. I want to hear what Goldman had to say. I mean, we're talking about inflation. We're talking about currency devaluation. Obviously, I agree with you, Matt. I don't think crude oil is inversely correlated to that. But the UUP here is dropping. What was the Goldman commentary? I didn't see that one, guys. So.
Well, listen.
You've heard it, Tim. You just haven't heard from Goldman yet.
And I was just finding a way to phrase that exact thing, because we've heard the Jim Rickards argument. We've heard the nether voids of the investing community talk about the death of the dollar, talk about it losing its reserve status. And we've had these conversations. We've had these conversations about the potential of that here at Tackle Trading and with this team. And these type of conversations in the underbelly of the financial community have been going on for a decade, and been going on hard for a decade with some very intelligent, adamant thoughts about it. But what you have never heard until today is a major bank come out and say that the dollar's role as the world reserve currency is at risk. And so July 28th, 2020, Goldman Sachs joins all of us degenerates. Once again, these banks are always behind the curve, right? They're behind it on gold, they're behind it on moves, they're behind it on everything. You know, the non-financial media has some really smart people, hopefully us included. But July 28, 2020, Goldman Sachs joins the, hey, you know, there's some problems here. And it's like, really,
Mark,
Goldman?
they join us tinfoil hat wearing, you know, anti-dollar crusading, you know, gold bug degenerate community. Yeah, they join all of us. I like the way you put that. They joined us degenerates. I'll wear that as a badge of honor. I've been talking about this for a decade, guys. Like,
no, and the Jim Rickards,
you've heard the argument.
Yeah, the Matt Justice, Jim Rickards, all of us lunatics, like, we have been so scoffed at and continue to be for simply bringing up the possibility, despite the fact that we have ample evidence that no world reserve currency just lasts forever, right? And there are situations that lead to that. It's hard to pick the day it happens, right? But I mean, to have Goldman Sachs, and I read some responses in different financial forums, all the outrage. How dare you, Goldman? What do you think? What I mean, all of the denial type things that you normally associated with such an apocalyptic statement.
Mm-hmm.
But if you don't think that there is,
real quick, Mark, how dare you talk about something that has been so historically accurate since 300 BC? How dare you have the gall to bring up history and facts and policy and evolution? How dare you bring that subject up?
And of course, you hear all of the arguments today out of that camp that the traditional mainstream take that. What is the blue red pill? I don't remember what it is in Matrix. Which one gives you enlightenment? I always get them mixed up.
Opens your eyes to the real world.
Which one opens your eyes?
The red pill.
All right, so all of these blue pill taking, they're like, well, what's gonna replace it with, the euro?
I like that.
What's it gonna replace it with, the euro? What's it gonna replace it through the yen? Listen, when it happens, you don't think that there are economic forces at work in the world who have a plan? They're just not sure how to implement it. Do you not think out there's a lot of individuals who don't exactly have United States of America's best interest at heart? All it takes is the right condition. Every time we've
talked about China, guys, every time we've talked about China, what response? What have I always said? The number one thing they can go is to currency. Mm-hmm. That's the number one thing they can do. If they start shifting away from the dollar, that is a massive sign that the world trading community is shifting away from the US dollar as a reserve. And the world community has been very, very specific over the last 10 years. This is not a new subject. The IMF literally came out in 2009 and said they are working on a new global reserve currency that would be a basket of currencies that could include the Chinese yuan, which was included in October of 2015, and that is the SDR. This is not a new topic for people that have been tracking this subject matter for the last 5 to 10 years. This is something that's been ongoing. When you look at the trade deals that China has signed with 56 other countries to use non-US dollar transactions in international trade, when the IMF starts moving away from using the dollar to inject into impoverished countries and countries that have been war-torn, that is the mission at the IMF since the 1940s, and they stopped using US dollars to inject for infrastructure, but they started injecting SDR like they did with Ukraine 5 years ago. That is the world community. When Vladimir Putin comes out and talks about the unfair advantage the US has from a reserve perspective, he's talking about the reserve currency of the dollar. When China says the same thing and they create the Asian Institute of Investment Banking System in 2015, they're doing it as a direct competitor to the World Bank, which is US controlled and dominated through the US dollar. And so even and by the way, I don't think the dollar dies in these scenarios. I'm not in that camp. I think we're going to be shifting to a new reserve system within the next 10 years that will be a basket of currencies that the dollar will be the most dominant currency in. But at the end of the day, what Goldman said here today was nothing people that people with knowledge of the historical situation of reserve currencies have been saying for years and years and years and years. Ultimately, currencies do change. They do. That's the nature of the currencies of the currency system. But what the central bank started in 2008, 2009 was the third edition of a currency war, which we've talked about in history, and that has just expanded over the last 10 years to the point where let's face reality, guys. Europe comes out with $1 trillion stimulus plan. We're going to come out with close to what, 2 trillion? Well, a lot of that is because we can print more money than other people. But that's not the biggest kicker, guys. Here's the reason why Americans don't deal with massive rates of inflation, despite us being the #1 indebted country in the world, despite us printing more money than anybody in the world, not even close. Here's the reality of why American consumers do not have the inflationary risk over the last 10 to 20 years that they will in the next 10 to 20 years is because, guys, you have upwards of $300 trillion around the world. $300 trillion around the world. And the #1 export we do in the United States, we don't export anything remotely close to exporting the United States dollar. We export our inflation to countries around the world. Well, what happens if that reserve status is threatened by the fact that you have zero interest rate policies? You're out of control from a printing perspective. Other countries don't want to be forced to take on the risk of owning your currency, especially in this type of environment where the central bank has literally lost its head. So what happens when China? What happens when Russia? What happens when South Africa? What happens when Brazil? What happens when India? What happens when these types of emerging market countries stop using dollar-denominated currencies in an international trade? And what happens when they stop holding dollars in their reserve system? Well, that question means dollars come home, and the inflation that we have exported over the last 40 years starts bearing its ugly little teeth here in America. That is and I don't speak about this a lot in the halftime report, but that is one of the reasons why I am so adamant that you need to absolutely own gold. I don't care what the price is. How many times, Tim, and I said in the halftime report, I don't care if it goes up or down on a daily basis. It does not matter to me. You're talking a macro protection. You're talking macro insurance against your biggest risk. See, people get so fixated on their stocks going up and down. They get so fixated on their real estate going up and down. They get so fixated on everything going up and down. But what is that everything they get fixated on priced in? That is priced in United States dollars. That's what it is. Your currency is your #1 investment. Your currency is your #1 risk. The money you have in savings, the money you have in the market, the money you have stored away in your couch cushions, all of that is in an investment. It is an asset that goes up and down in value. And as we crow every day about how important the equities market is and the real estate market is, your #1 investment is going down every single day. And even when this chart goes up, the net buying power of all fiat currencies goes down every single day. And if you don't own instruments in the financial world to protect against your #1 risk, which is your currency, you are making the biggest mistake of your life in this environment. You absolutely need to own instruments that protect against currency. And what are those instruments? It's very simple, guys. Guns, ground, gold. The G's. Guns, ground, and gold. Those are the instruments that protect you against your currency, and then a little bit of precious metal, silver, to just make it feel sexy.
What about the precious stones, like a diamond ring? I think that is inflationary, right? as well. I know that's not necessarily the guns ground and gold type of thing, but I remember when I bought my wife an upgrade on the diamond ring, I didn't hesitate at all, because I'm like, okay, if the dollar dies, this will probably go up in value, inverse relationship. I'll tell you, I mean, so did Goldman come out and basically make your argument you've been making for 10 years, Matt?
Pretty much.
Okay. Okay. Well, nice to know you, Goldman, that in 2020, you're finally catching up to some of the conditions that have been developing here for a long time.
Listen, I'm willing to bet they got some analysts at Goldman that have been talking about this for years and years and years.
Sure.
Right?
Yeah. Yeah.
It's just but coming out in an institution, because people like me have been criticized in traditional media for many, many, many years. Just you're a gold bug, when I'm not. I'm an analyst. I'm not a gold bug.
You're not gold bugs.
I'm not a gold bug. Okay. I'm an analyst. I analyze things. But in terms of, I'm not a gold bug. But criticizing, the dollar, how dare you question the dollar? That's un-American. It's like, no, it's un-American to get your ass handed to you and not do anything about it. That's un-American. But at the end of the day, yeah, Goldman just came out and said that, Tim. But to me, it does signify something of significance, given that the weight that a Goldman Sachs brings to that conversation, though. And to see someone like Goldman, who didn't specifically call out the Fed, but the Fed is responsible for this, guys. The response to the central bank, the cowards at the central bank, and their response over the last 10 years, they're responsible for this. This is one of the reasons why a lot of people think in the 21st century, Guy Adami, Mark, why they believe that who are the evil villains of the 21st century? It's not going to be politicians, guys. It's going to be central bankers. That's who the villains of this story is. It's the central bankers. But it did signify some level of importance to see a very respected institution like Goldman come out and talk about this very important subject.
Mm-hmm.
Yeah. And just because inflation's on the horizon, don't do the dumbass thing I did 15 years ago. So like when you start getting into the inflationary and you see the long-term potential, I was like, well, I'm going to go buy a BMW because my cash is useless anyways. Well, I was just looking for an excuse to buy a car that, and make a splash, thing. No, like Matt said, I mean, real assets. Grow your money.
The car is not an asset. That's a liability.
But yeah, so don't go just because cash is useless. Don't use it as an excuse to make a dumb purchase.
The last thing I'll say on this, Tim, then I'll turn it back over to you, is simply this, guys. And this is a scary concept. But people fear the equities market because they might lose money. Would you agree with that?
Yeah, it's one of the reasons that people
that fear leads them to lose money. That's what that fear does, because that fear leads people to save money. Well, guys, when was the last decade savings worked in America?
It's dead.
No, maybe the 1980s.
No, it's 90s. It
Yeah.
was the 90s.
Yeah.
That was the last decade where your savings could offset the rate of inflation. That's the last decade. It has not worked since the 90s. Okay, this is not a new concept, which means that fear of losing money actually leads you to lose more money, because you get stripped every year from inflation and devaluation. You lose upwards of 2 to 4%, depending on the rate of inflation and devaluation. You lose up to 2 to 4% every single year, simply because you own currency. And I'm sorry, you owning your dollar, that US dollar, the fourth edition of the federal currency, hundreds of other statewide and municipality currencies, the fourth edition of the dollar, you lose money on. Every single day, you don't get that money working for something else. You have to put money into asset classes. It's not a debate. It's not a question. It's not a philosophy. It's nothing. You have to put money to work. If money is stagnant and still, you lose money. Money craves something. Money wants something. It wants asset classes. It wants to create velocity. And the concept of the velocity of money is one of the most important economic concepts that has ever been talked about. And we just simply don't talk about velocity of money anymore. We just don't talk about it anymore. It hasn't been talked about in 2 decades anymore. Well, guys, again, why do you own gold? To protect against that. It's not to make money. You shouldn't look at the price of gold on a daily basis and say, oh, I'm making more money. No, you're not making more money. You're offsetting the loss you have in your currency is what you're doing.
Mhm. Yeah, and when it comes to savings, Matt, I do promote saving enough to cover emergencies. You know, too many Americans don't have any amount of money in savings. But once you get past that threshold, money should go into investments, period. Whether it's equities, whether it's metals, whether it's land, whether it's real
Why?
estate,
But
all
why?
kinds of
But
stuff.
why? But why? Why do we say that? Why is it that we believe as a society you should have 6 months of savings?
Even
Because
3
somebody
sometimes.
said it at one point, and
Yep.
it just became something people started believing it. You should have 6 months of reserve. Why can't you have 6 months stored in gold?
Oh, that would work for me too.
What's wrong with that?
Something.
I would
It's
say
not credit card debt is all I care.
yeah, you
Well,
get
there's nothing says you can't own gold. There's nothing says you can't own other versions of a currency, Tim. Commodities, I just want to remind people that commodities have been a form of a currency for 6,000 years. For 6,000 years, commodities have been a form of a currency. It has only been in the last 40 years or 45 years that we've embraced currency as a savings mechanism. Before that, it was not save 6 months of reserve cash. That's not what it was. It was to save assets, land, property, guns, gold, those types of instruments. We got to get back to our core as Americans. You want to talk about being a good old-fashioned American? Own land, own property, own assets. Get rid of your currency. Own it in an inflationary protection mechanism.
Yeah, I like that
It's
mindset.
not hard. All you
Find a
got to do is
dynamic
call
way to
Pete
save.
Thomas and have Pete take care of it.
Yeah.
These are not difficult concepts to understand.
Yeah. No, it's a really interesting conversation and one I would love to even have further on a podcast at some point, because quite frankly, this is something that, Matt, you've been talking about and teaching for literally a decade. You know, we've been having these conversations. I think one of the original YouTube videos on this channel was about currency devaluation and some of the risk for inflation. So yeah, I would love to extend this conversation. Obviously, the dollar's in free fall. If you go back to that dollar chart for a second, that breakout.
And by the way, Tim, I don't want to see the dollar go down. I don't want to see the U.S. lose reserve status. Are you kidding me? That's end game type scenarios. That's not something I want to see.
I don't think it's highly probable it will. I just think it's got some possibility in there.
Let me disagree with you very openly. Not only do I disagree with that, I'm putting it at a 100% probability that the U.S. dollar will lose its sole reserve status within the next 10 years.
Sure, but isn't it still going to be a part of the SDR, a little bit of a piece of it and all that kind of stuff? Yeah, I would agree with that.
I chose my words very, very specifically.
Yeah, I would agree with that. So there will be changes.
Even if it does go to the SDR, even if it does lose status, right now you're talking 65% of all international trade is settled in dollars. If you see that go down just to where the allocation in the SDR for the dollar is, you're talking 44%. And at 44%, you're still talking $60 trillion coming home. You're still talking $60 trillion, which is a massive number when you talk about U.S. debt right now in the U.S. at 26 trillion and money supply right around 17 trillion.
Well, if you
it doesn't take a rocket scientist with an MIT degree in mathematics to understand that rate of inflation.
Or economics. I mean, if you think about that right there, Matt, raw demand for dollars will be going down if they're using less for international trade. And we all know the supply's been going up. Mark, what happens to the value of something when you have massive increases in supply and a drop in demand substantially over time?
Dude, I don't know. I just been ordering more cans of Campbell's soup for the upcoming apocalypse. So, listen, this is listen, and it's not something like once you wrap your head around it, you don't panic because you plan, you prepare for the scenarios. It's too.
I don't lose sleep of the scenarios, Mark, at all.
Like. You just have to, you can't ever be caught off guard where you have a life-changing event and you're scrambling. Just think of all of those people you saw at the store when COVID first hit and all of the empty shelves were there and people were like, oh, what do I do? And they were panicking and they were making irrational. They were throwing stuff in their cart that's still sitting in their pantry, right? That's never going to get eaten. Like,
and Mark, to kind of go on that, mind you, I do not see a scenario in the U.S. playing out like the Weimar did from 1919 to 1923. I don't see a scenario playing out even similar to what the Brazilian government did in the late 80s to early 90s, where they were trying to hyperinflate their currency to get out of debt. I don't see those scenarios playing out. I see the dollar still being the number one utilized currency in the world. My analysis is simply that will see a staunch reduction as the world looks to more a diversified currency system moving forward.
Mhm.
And at that point, you're talking SDR allocation, and you're talking 65% down to the 44%. But these things take decades to really play out.
Well, not, and I got to add to that.
By the way, Tim, we're already into this a decade. If you remember, in 2013, Tim, I was calling for the SDR to inject the Chinese yuan
In 2015,
in 2015, and they did that.
Yeah.
If you understand the way these works historically, it takes time. The dollar, for example, World War I, the dollar was not a reserve currency. It wasn't an international currency. It was created in 1907. It was a newly, freshly minted not printed currency, I should say, in 1907. And by when World War I hit, it was the British pound is the number one currency in the world. It was the number one reserve currency in the world. And the British pound was destroyed in World War I, just absolutely unmitigated disaster from a currency perspective. And so the rest of the world started shifting away from British pounds to US dollars. And by the late teens, the US dollar was actually the number one utilized currency within international trade agreements. But it wasn't until 1944, the Bretton Woods Agreement of 44, that it was actually labeled the number one utilized reserve currency of the world, thus replacing the British pound. This is not something new that Goldman Sachs talked about today. This has been going on for over 10 years now. And so if you think about that from a historical perspective, we're going through that 1920s era, 1930s era, where you have massive economic pain and you start shifting from a currency perspective. And so, yes, I do believe within the next 10 years, there will be other currencies to compete against the dollar from a reserve perspective.
Mm-hmm. Probably not Bitcoin.
No, it's not going to be Bitcoin.
Probably not going to be Bitcoin. I know that the Bitcoin kids were calling for that for a while there. It's going to be fascinating to watch this thing develop. And by the way, it's happening faster than I even thought it would. All of this stimulus, all of this money creation, we even talk about more stimulus today. They are radically changing the supply side issue. And obviously, like you talk about, Matt, if that reserve status changes, the demand side issue will change
any
rapidly.
Other country in the world. You're any other country in the world. And you see the United States with its 370 million citizens going into debt. What are we going to go into debt this year? $6 trillion?
Yeah.
Going into debt, $6 trillion.
Seven, isn't it? Yeah.
Show me a country that can do that. Show me a country that can do that doesn't risk hyperinflation within a few years of their currency. Not one. There's not one. The only one that can probably compete in that is maybe the euro, because it's utilized in the Eurozone. It's also utilized in African countries as a reserve currency as well. So it's right around 26% reserve status right now as the Eurozone or as the euro. So the euro may be able to compete in that capacity with that. But if you're any other country outside of those zones, you look at the US and you're like, that is an unfair advantage the US has in these environments.
It is. And that's where we export our inflation. We have a lot of control over economic systems. And this is a very, very big issue for the U.S. for the next 5, 10, 15 years. There's no question about it.
I don't want to put the tinfoil hat on today. I'm just telling you guys, own gold. Just own gold. Yeah. Even if I'm wrong, you're still right, because you're offsetting savings loss.
But wait. What if it pulls back to 1,800? Matt, should I lock in profit? Or what if it does this? Or what if it does that? Or,
no.
I get the emotions people run through when they've had big gains. I do get that.
Yeah, but they're all making that decision because of their emotions in currency. A literally made up, it's what does Christian say? It's a fugazi. Right. It's just fake. It's fairy dust. It's nothing. It's not real. It's a creation. It's conjuring. The only thing that gives it like any type of monetary value is our belief in this fugazi, this fairy dust, type philosophy. Own gold. It's real. Call it a pet rock. Call it whatever you name it. I don't care, but own it, because it's the number one instrument in world history that protects against these types of risk. This is not the first time a country has went through this type of currency risk. We've only seen 570 currencies come and go, and this is not the first edition of the US dollar. Anybody that has a sixth grade education in history understands the importance of owning gold. Anybody does. And if I have to wear the label, the fake label of calling me a gold bug and a conspiracy, fine, I'll wear that label. I don't care. Label whatever you want. I feel a responsibility to make sure our community is protected, and they absolutely should own gold.
I agree 100%. Physical or the GLD, there's different ways you can play it. And like you talked about, Matt, get a hold of Pete Thomas over at Zaner. We have an in with one of the most reputable brokers out there in terms of an expert. And definitely Pete can help you guys over at Zaner if you guys are interested. There's information on our website. We did that podcast a couple of weeks ago. We got to move on. We got to talk stocks here as well here today, guys. There are some
David
companies
asked a great question. What happens if we put 6 months savings in gold? The margin requirements, David, are in the futures contract. So we're talking about the paper assets when you're talking about the physical ownership there. In that environment, gold will go down in the short term, and you should buy even more of it.
And I think we're talking physical there, right, Matt? I mean, if you're looking to
paper doesn't protect paper.
No, yeah, we're talking physical.
Paper doesn't protect paper.
Yeah. If you're going to take that approach. Bitcoin, real quick, take a peek at that chart, Matt. There's not much we need to update in terms of that, but it did hit 11K. It is holding for another day here. The trend is now developing, and it's got some momentum to it. Interesting. You got these weird blow off top candles across some of these momentum products, but as of now, still looking pretty good. I do want to move into talking about companies though here today, guys. I think it's the next thing that really is on my mind in terms of importance. There was a bunch of earnings.
Mark, I just went to Mark. I saw that headline from Goldman Sachs today, and literally my jaw dropped.
I think
I'm 2 for 2. Like yesterday, I got Matt going on the Kramer rant. Today, I got him going on the gold rant. The only job I have tomorrow is to find the headline or comment. Listen. See if I can go 3 for 3.
You can try to go 3 for 3, but I'm going to get prepared for this one. This one is like my trigger point. Currency risk is my trigger point. But I will tell you, Mark, Tim and I had some great conversations last night about your after my Foshi comment about you throwing from second base to first base. We went through story mode on your softball experiences.
I had a couple of good memories.
We had a couple of really good memories. So,
Mark,
you can keep tickling the bear a little bit.
All I remember is getting thrown out of about 17 softball games. I had a temper when I was a younger man, and let's just say I got thrown out of a lot of softball games, and I had a lot of men much bigger than me want to beat the crap out of me because I might have given them an elbow in the stomach on the way rounding first.
Oh, Tim, there's I didn't tell you this one, Tim. In Wellington, Utah, I was young, man. Mark had to be about 25, 20, I remember that fight. Something like that. Yeah, we were playing a softball game, and Mark, for some reason, wanted to pick out the biggest, toughest guy in the crowd. And he picked out this like 6'5", 280-pound behemoth and started telling him to F off and you don't know what you're talking about. I swear to God, I've never seen a man run faster than Mark ran as he started chasing me.
Listen, if you're going to pick a fight, might as well, if you're going to take a beating, you might as well take a beating, right?
Mark, I'll tell you what I did. I grabbed the bat because I knew that was the only way taking that man down.
Yeah, he was a huge man. I was there actually. I remember being a little kid and seeing that event.
Massive man.
Listen, you know what
the Muhammad softball moment is the funniest softball moment I've ever been.
I'll say this real quick. If you want to understand Mark, he's one of the most competitive people you will ever meet in your entire life. There's not a question about it. It's why he loves to trade the way he does. He loves winning. There's no question about it. Winning is something very important to him. And some of the most enjoyable memories we had last night was when I was thinking about Mark having conversations with umpires he disagreed with. I will tell you. there were a few of them.
Listen.
We came up with the conclusion that you absolutely deserve to be thrown out of that softball game.
Oh, listen, I probably, in all reality, I probably have been thrown out of about 50 sporting events in my life, between basketball
And we mean
games
when
and
we mean
softball
thrown
games.
out, we're not talking about you're ejected. We're talking about you are removed from the area. Like you have to leave the complex.
Yeah.
Listen, each and every one of those umpires had it coming. That's all I gotta say.
Hey man, they might have. There's no doubt about it. We'll have to reminisce about those stories,
Yeah.
you know, a little bit after. Some of them we can't say on the show.
Podcast stories.
No, definitely not. All right, let's talk some of these earnings here, Matt. I know that some of these stocks are consumer staple type companies, whatnot, but there are some big names: Pfizer, McDonald's. Let's run through the numbers that you got. We can go in any order that you like. We'll have Mark and myself give some commentary on them. Okay.
Yeah, Pfizer here. First company reported. Obviously, Pfizer's been in the news recently, given all the vaccine information. I believe they also had some news. They started phase 3 trials here, or they're going to be starting phase 3 trials. But Pfizer reports earnings here, beat on EPS numbers at 78 cents versus the expectation of 64. Revenue came in right in line at 11.8 billion versus 11.9 on the expectation. Revenue did decline 11% year over year. And Tim, I don't want to call this a guidance upgrade, but they did increase their guidance from 285 by 295 to 280, from 282 by 292. So a little bit of a 3 cent, 1% increase in guidance. That's completely made up. I don't care about that increase in guidance, but you know, Pfizer responding fairly aggressively, threatening a breakout here of that 39. Let's give that number there, about 39.25. Mark, commentary on Pfizer's reports.
Listen,
I know this
it's par for the course of Pfizer. I mean, I gave it a B on going through the numbers. Pfizer is a company I actively follow. Two thoughts on it. One, I want my shares back that I got called out on a while back ago. And two, when you have these really quality dividend companies go to their cycle lows, go down near support, it's why I'm always screaming to pick up Pfizer. You know, I was a big proponent of picking up Pfizer 4 weeks ago. Nice, solid dividend company. I mean, what's the worst that's going to happen? You're going to get stuck with a nice, solid dividend company at a really reasonable valuation. That's it, winning investing. You know, when it's up near the highs here, you know, wait for the next cycle low, wait for the next news story that sends it down, and then pick up some Pfizer when that happens. It's a quality company, pays a decent dividend.
Mm-hmm. Next one, Maddie. I had McDonald's as an interesting one I want to take a look at. I'm not sure interesting is the right adjective there, but a company that is of note and importance. What'd you see in McDonald's numbers?
McDonald's, honestly, not very good. A company like McDonald's, you want to see a little bit more out of what we saw today, but they came in at 60 cents per share versus 76. And by the way, guys, I don't give McDonald's a pass the same way we give other companies a pass in the pandemic. McDonald's isn't one of those companies that was impacted to the same degree. And so I just don't give their earnings number a pass on this, but they did miss on EPS. Revenue came in above line at 3.8 billion versus expectation of 3.3. And by the way, guys, just so it's said on record, there's never been a more distressed earnings season than these numbers. Like these numbers coming into this season are so far distressed. They're already like these earnings expectations are already predicting really bad numbers. Okay. And so even on beats, the beats are beating really, really bad expectations. And when a company like McDonald's misses a depressed expectation, it's even worse. But 29.6% decrease in revenue year over year, that's a real bad number. Mark, what was your take?
Listen, this is a terrible report. Listen, I like McDonald's. Anything with a drive-through model, some people are doing actually pretty good. Companies like Popeyes, revenue increasing. Now Popeyes part of QSR, but you're seeing anything with a drive-through, takeout orders, things not doing too shabby in the pandemic. McDonald's numbers were really bad. You're up near resistance. You're coming off a horrible report. I wouldn't be surprised if you see that 180 tested sooner than later.
Is it so bad that you're not looking to buy a dip here? I mean,
Oh, I
McDonald's
did.
being
No,
one
no,
of
no,
those
no, no.
safety
I would
value
not buy.
plays.
I would not buy a dip in McDonald's. That was not a good report. And it's not great valuation. And there's nothing that's screaming a deal. Like when you have a company come in with that bad a number, and you're at these elevated levels compared to where you've been in the last couple of years, that's a recipe for disaster. So small dips. No, there's a million other things you can make a small dip in.
You know, one
So
other
If
key
value
tac-
companies with a 25 P ratio is not about. Yes, I agree 100% on
Yeah,
that.
that's
Yeah, I mean, because like Pfizer a couple weeks
100%.
ago, when like I talked Pfizer on when it was down those lows in the weekend reports we do for pro members, we share a lot of valuable tidbits with pro members. Good time to sign up. 15-day trial. Go to tackletrading.com. You get a lot of valuable insight and then some. But like Pfizer's PE ratio during that stretch was like 11, 12 at that stretch. Really nice valuation, nice dividend yield, good opportunity. That's not where McDonald's is at right now, especially with more headwinds, right? Especially with more headwinds. Hate McDonald's at this level a lot.
You're just not going to have a successful investing career by buying companies like McDonald's, a value type play here with the 25 P ratio. That valuation is absolutely
Now,
terrible
I
in
will
front of
rescind
us.
everything I just said, McDonald's, if you give me a lifetime supply of McRibs. And
Oh,
I'll
Mark would be the #1
I'd
salesperson.
lie. I'll find some stuff to spin all of
Oh
that crap
man, you'll
earnings.
find all the good things.
put that
All
damn
right,
sandwich to bed.
Altria here, Tim. Next one, Altria, and I'm not seeing anything McDonald's chart. If they were going to post something positive, a breakout of 200 with some momentum, I think you had something there. But with their response to earnings, and I agree with Mark, I don't know if it's a devastating report, but it's not what you want to see out of McDonald's.
Nah, you needed to see. Yeah.
This would not be what I would say McDonald's showing a heartbeat.
Yeah.
They're on life support, right?
Sure.
With that type. I hate words in 2020. They're not going to die anybody. I'm not saying that, but it's not a good play right now.
It's not a
Altria,
deal.
it's not a deal, and you got to get a deal on value. When you're talking value companies, you got to get a deal. You have to get a deal. Altria here came in at $1.09 versus expectation of $1.06. Revenue, real good beat on revenue here. 6.4 billion versus 5.1 on the expectation. They increased revenue year over year at 3.8%. And one of those open questions coming in earnings was guidance. Are these companies going to bring back guidance? Remember, we had about 175, 180 companies in the S&P remove guidance last quarter. Altria is one of those companies that brought back guidance. They brought it back slightly under what it was going into it, which I didn't take as a negative. That was to be expected. But I took this overall as a positive. Mark, what was your reading in Altria's report?
Altria, and I've been like, once again, pro members, especially, when I do those weekend reports, everybody on the weekend knows Altria is one of my favorite dividend companies. Reasonable valuation, but most importantly, it is a dividend play, is one of my favorite dividend plays. Yield of close to 8%. They actually increased their dividends a couple pennies. You're not seeing that a lot these days, right? I put a deep dive into Altria earlier this year, and that dividend safe, and that's all you really care, because you're not swing trading dividend companies. We got tech, we got stay at home, we got so many things to swing trade. We don't have enough time or money to trade them all. When you focus on dividend companies, what your long-term investment in a company where you think that dividend safe, nice yield, those naked puts at that 39 level look attractive to me.
Well, let me paint a technical argument. Maybe you can not get the dip here. Okay. Technically speaking, on the daily chart, Mark, you are kissing up against that 200-day moving average.
Yeah.
Okay. On the weekly chart, when you're looking at the 3-year weekly, you're kissing up right against the 50 SMA on the weekly chart.
Also,
for
pay
the
range.
first time, hold on. But for the first time in years on Altria, you have an increase in support on the weekly chart. You have an increase in support from 31 to 35 up to 38. And now you're running into that weekly breakout with some, and you're not overextended on the weekly chart running into that. Does that technical setup and the strength we're seeing in the weekly chart, does that give you a little bit of maybe I shouldn't
I
wait?
need to do it now before it's too late.
Yeah, something along those lines, Chucky.
Yeah, and I have a thesis. I've mentioned this a few times over the last couple of weeks. I really believe, because Fed's not raising interest rates anytime soon, right? And we
No.
haven't seen it yet. We've seen attempts, but I really think in the coming 18 months, you're going to have a stretch. I don't know if it starts today. I don't know if it starts 6 months, but I'm positive it happens where there's a stretch where Wall Street makes a huge rotation to pick up yield. You know, and so they'll want to pick up yield. They can't get anything in bonds. They can't get anything in treasuries. And as the market's craziness subsides, where, oh my gosh, I can go make 12% in a trade, yield is going to become very important. So companies that produce yield, I really think they're going to have this moment where you see these really nice, steady uptrends. We saw it in REITs, XLRE last year. You know, similar type dovish environment and just this nice, steady. You saw it in utilities last year on XLU, where during that stretch, it just kept going up and up and up as those yield bearing products just consistently went up, consistently went up, consistently went up. And the only thing that blew up that stretch was COVID-19 when the whole market to blow up the trend. I think you're going to see that again in reasonable yielding companies. And so
and Mark, remember when that environment really took hold in utilities and real estate and the argument that we saw constantly was, well, you can't get, especially after the Fed capitulated in the summer last year. Well, that argument that we saw in the financial space went from, you know, growth to, well, we can't get anything from bonds. Where are we going to find our yield? That thirst for yield. You saw that argument play out. And what did utilities do last year? What did XLRE do? They were some of the best performing sectors in that environment.
I mean, yeah, look at that 2019 stretch. That would be good for a growth stock.
Absolutely.
You know? And it was coming from a yield area. I think that stretch is, I really do believe once the craziness of the volatility settles down and tech starts trading in a reasonable range or a reasonable pattern, I think you're going to see this shift to yield, and because it just makes too much sense for it not to happen. And since you know the Fed isn't raising interest rates, are going to become hawkish anytime soon, I think it provides a positive backdrop. So those yield-bearing companies that you can trust, like Southern, like utilities in general, like Altria and a few others, when you get a chance to pick them up on a dip, or when you get a chance to pick them up on a technical breakout, if dividend and yield is important to you, I think it's a good play. I mean, what you going to do, and what's the worst that's going to happen? You get stuck with a high yielding dividend stock for a while.
Yeah, and worst case scenario, Altria goes down 20%. You offset it through cover calls and dividend. I'm interested in this Altria chart here, guys. I took the earnings numbers as a positive. Number one, I like the increases in support we're seeing on the weekly chart. I like the horizontal resistance level right there at 42 that you're trying to reclaim. And if you can get above that 200-day moving average on the daily chart, which it coincides with the 50 period moving average on the weekly chart, I think you got evidence of a pure reversal here.
Yeah, some reversal characteristics in that trend that are developing. Remember, we did see Philip Morris's earnings report last week, another big tobacco company, some of the similar kind of stuff, and they have a pretty nice dividend as well. Interesting ideas there, guys. I like it. Let's keep moving through the market in terms of earnings. Matt, what do you got next?
Thank you, Kat. My daughter just came in and informed me that she's more computer savvy than I am.
That's implied for any 10-year-old versus any 40-year-old on the planet right now. So, Kat, you're
just
correct.
Deeply offended her, by the way.
No, it's true. She is more computer savvy than you. So
you called her the same as everybody
11,
else.
Yeah.
I'm just saying it might take some financial punishment from you to make that one right. I know who my daughter is. She's a cold-blooded capitalist. So
I like it. I
thought she's like, Dad, why are you pumping up a cigarette company?
No. If she knew Altria was a cigarette company, she would have said that.
Yeah. What do we got next, Maddie, earnings wise?
3M is next on the slate here. 3M reports earnings of $1.78 a share versus expectations $1.77. Revenue 7.2 billion versus expectations 7 billion. I took it as a ho hum type scenario. I didn't see anything here.
And nothing changed about your
Nothing
opinion
stood
of
out.
3M.
Yeah,
Agree.
nothing stood out for me either. The last one I have there is just, good old Hawk. Everybody loves Hawk, and like we were going through earnings roundup and Tim's like, well, what about Hawk? What about Hawk? I'm like it's the 50th highest market cap company on the list. He's like, you got to get Hawk's numbers. Everybody loves Hawk. I'm like, well, not everybody. But Hawk, and when I mean not everybody, I truly mean not everybody, since they saw a loss of 35 cents a share. So they saw a loss. They were expected to actually show 12 cents a share on the expectation. They actually lost 35 cents. I'm not shocked that they lost money. I mean, we are talking Harley Davidson here in a pandemic, so I'm not surprised they lost money. They came in above revenue expectation, very depressed earnings expectation at 865 million versus 781 million on the expectation. Revenue, Hawk, minus 47% year over year on revenue. I took it as a very, very nasty earnings report. Don't understand the buy the dip mentality we're seeing in Hawk today. Gap down, initially went down even on the cash open to 26. The buy the dip mentality was strong.
The management promised that they would streamline costs, Matt. So basically it was positive commentary.
Oh, okay. So let me get this right. Whenever, and this is code, guys, when you see a company promise to streamline cost, what does that mean?
They're going to lay people off.
What are they promising the investors?
Yep.
A lot of people aren't going to be working for Hawk.
A lot of people are going to get fired. That is how companies, so they say streamline costs because that doesn't have the same negative connotation as we're going to fire a lot of people.
Yeah.
Right.
Oh, I so want to watch Office Space right now.
Yeah.
There's a lot of scenes coming.
Any particular scene like?
Was it the season with the Bobs where he comes in and remember that where they're talking about laying off people?
Sure.
And they're like, yeah, they're like using their fancy language. We don't like the term fire. We like to think of it more of a reorganization.
That's a cult classic.
That's what Hogg said. So there you go. But I still don't see anything here. That doesn't whet my appetite.
It was a terrible report. If you're buying this report, you're a braver man than me. So it was a terrible report.
You have the braveness of, who would that be? William Wallace, Braveheart?
Yeah. No, listen.
You have William Wallace's conviction and courage and desire if you're willing to buy Hog on this dip. That is
terrible report.
Yeah,
terrible report.
Marky, any other companies that had earnings that grabbed your attention you want to talk about?
Not really. No, I mean, you covered the big ones for me.
Couple more stocks in the news. I want to grab your guys' take on Kodak, KODK. I don't know if you guys remember back in the day, what in the world happened here today? Kodak, the camera making company, they obviously did a merger with Eastman Chemical at one point. Eastman Kodak now is a different type of company. And Matt, they got some government contract to produce medicine or something. I read through this news. Shares of photography pioneer rallied more than 250% as the U.S. government awarded the company a $765 million loan to manufacture generic drug ingredients. Who knew?
Who does Kodak know?
Who had Kodak on there?
Who does Kodak know?
Oh my gosh!
Who's best friends at Kodak with somebody in government?
Kodak's got some pictures of somebody. That's
Tim. They got
July
something.
28th. Goldman comes out on the reserve status of the dollar, and Tim makes me genuinely laugh. A day in history. That was funny, Tim.
There you go. But guys, they got money Moderna got.
Yeah, that was crazy, man. Seriously.
I don't understand it.
I understand wanting to bring manufacturing and supply chains back to America and home and whatnot, but giving Kodak $765 million to start manufacturing drugs, I'm not sure. That was an interesting one. Netflix here, Maddie. They actually This is interesting. It's a reminder as to why Netflix is Netflix. They came out and they did the Emmy nominations, I believe, today. And Netflix had 160 nominations, above the second highest. I think HBO had 107. Their original content, their programming, the things they do from that side of it, intellectual property, this is what has made this company this company. Just another reminder. Matt, any interest in Netflix right here, by the way? It's a deep back.
I could see people signing up for a breakout of $500 here. You could see some momentum pick up to 525. I deeper retracements in this marketplace that is momentum based give me a little pause for concern.
By the way, out of all the titles that they got nominated, I think one of the best shows that they do have right now is that Ozark show. If you haven't seen that out there, it's a pretty good little stream. No doubt about it. Netflix just been crushing it for a long time. Mark, are you in that?
We've been analyzing Netflix a long time, and I remember the argument of Netflix was, well, what's going to happen to this company once other companies that own the intellectual property start pulling their content, right? And that was a really big concern. Concern about, okay, what happens when they lose The Office? What happens when they lose Friends? What happens when they lose licensing agreements with
Sure.
Peacock, who is trying to stream their own stuff, and Disney pulling away their stuff? And that was the biggest open question. But Netflix has a war chest for original content, and the question coming into a lot of Netflix was, can they start producing their own original content to offset some of the loss that they're having in the licensing agreements they have with other media providers and whatnot? I think Netflix has figured it out. By the way, this Emmy, I didn't even see the Emmy nominations, Tim, but this was not the first time. That last year Netflix dominated Emmys too in terms of Emmy nominations. Netflix original content is getting to the point of being really, really good.
And it's across the board. It's movies, it's series, it's documentaries, it's even, I mean, there's all kinds of stuff they're doing.
And
that
think about it, Tim,
is really good.
Netflix, again, coming back to that original content is, would people binge original content? Well, Netflix not only figured that one out in terms of if they're going to binge, but what they've found out is not only do they binge the original content, they stay on Netflix to binge some of the other content as well. Netflix, debt-driven company, they spend a lot of money, no doubt about that, but they've figured out the original content piece, in my opinion.
And if you like docs, by the way, I told you this one last night. They just came out with a doc. The business of drugs is just really well made about kind of the money behind how some of those things work. It's really good. They're just a new release and original content for them as well. Man, I agree. I actually like the chart in terms of one thing. If you break above that little pivot point, Matt, from the earnings gap, and you get back above those moving averages, I mean, you do have some air there. You
definitely could see some momentum come, and the 525 would be target number one. The previous high at 575 would be target number two. Yeah, I can definitely see that set up here, T. If you can close above that $500 price point, get above those moving averages, and the market starts believing back in momentum, you could see Netflix rise above that 500 fairly aggressively. It's just the deeper retracement does give me a little pause for concern.
Absolutely. By the way, just in terms of programming note and things that you guys need to be aware of out there, after the close today, AMD, Visa, eBay, Starbucks, some big names there. The AMD one, obviously,
all more important than McDonald's, Pfizer, 3M. And not only that, you got the Fed on tap too. It's a big day in the market tomorrow.
And then before the market tomorrow, Shopify, Boeing, Spotify. Yeah, we're going to have, these aren't your grandpa's dividend companies, Marky. We're going to have some of the momentum stocks that are coming in today and tomorrow that we'll be analyzing, and a Fed meeting tomorrow. But quite frankly, guys, that's what I've got here today. Not a lot else in terms of on my radar. I got
a couple charts. Taiwan Semiconductor, TSM. One of the things we teach people at Tackle Trading is, technical setups, all of that. Taiwan Semiconductor today for me is one of those don't chase the dragon examples, a phrase that we use at Tackle Trading to explain when a stock goes parabolic, has that big move up. Don't try to chase that. Wait for another pattern to develop before re-entering. Thought it was a case textbook example. And then Tesla, TSLA. I was able to talk my brother yesterday, Timothy Chad Justice, into the pink shorts bet on the podcast. So if Tesla goes to 2,000, I got to put on a pair of pink Tesla shorts. And if it goes to 1,000 first, Tim does. So we got our Tesla bet.
The pink shorts, we better buy at least a pair before they're out of stock though, Marky. I mean, somebody's going to lose the bet, right? So we might want to get on that. They might have a limited supply of that on the Tesla store. That was him trolling, obviously. I do like it. I still like my side of the bet, by the way. I've got
On
the trend.
Tesla?
I've got the trend in my favor.
Oh, I like your side of the bet too.
I
I've
like
got
your
the
side of the
story.
bet too.
Yeah.
Listen, this is Tim's best odds for winning any bet in the last 2 years.
We'll see. All right.
All I know is you Tesla bulls should be very, very scared that Tim just made a bet on you. So
I
that's
just
all I'm gonna
want to
say.
congratulate Elon and Tesla for finally getting a positive PE ratio at 724.
Dude, is that what the final number came in at? 724.
Final number came at 724.
Hey man, it's only going to take 724 years of current earnings to justify the
It's about the future, man.
in the year 2525. Is that
How many people do you think that understand? And I'm not making a Tesla argument here, but how many people do you think understand percentage wise when they make the it's about the future argument, understand that the future represents 724 years?
I don't think they get that part.
You don't think they get that part?
No. Well, I mean, we're going to download our consciousness into the cloud, and maybe we will be alive to see that moment. Who knows, Matt? I mean, some of the stuff Elon's talked about over the years, they probably still think it's fine. I don't think they would care. You would not get Tesla bulls off of their case over that factor. But it is, dude, it's historic. They now have a positive PE ratio for the first time in their history. 724.
It's just a really big positive.
It's a big one.
It's a really, really, really big. Man, that's a big number. They better start showing positive returns every quarter.
Yep. A couple of quick charts from me here as we start moving into final thoughts that are grabbing my attention here, Matt. Stuff that I saw just from the reports over the weekend that's still grabbing my attention, still on my watch list, on my radar. FedEx, I'm watching this chart develop a little bit here. You know, nice little breakout on Monday. If you missed the confirmation, you got an inside candle today. Morgan Stanley, I'm very interested in as well. It was on the, I believe, the option report, still kind of in that retracement pattern.
I like that $50 support level on Morgan Stanley.
It's playing defense right there, bro.
Like
I mean, yeah, it is looking good in that regard.
That upward move in price yesterday on Morgan Stanley, kissing off 50, kissing off the 20. Inside candle today doesn't give you a lot of, joy, but you got to look at that as confirmation.
Mm-hmm. One more on the bull side, CarMax, KMX, it was on the option report in that regard. KMX, I'm still watching and keeping on my radar. 10,000. Gotcha.
Which
Cody.
one?
KMX.
KMX.
CarMax.
Yeah,
Still watching for that breakout.
Still.
Yeah. And it's just a reminder to everybody out there, you got to keep coming back to your watch list. Matt, you asked me a question. We were doing the podcast yesterday. How do you find picks? And your watch list are usually going to be your go-to area on a day-by-day basis if you develop them. And the options report, stock report, these are places that you can find them. And there's a couple on the bear side I'm still interested. Raw stores
Keep an eye
kind
on
of grab my
CarMax,
attention.
that breakout of 100, and I don't care about this.
Don't care about that one
tick
at all.
right here. I
Yep.
do not care about the tick. That tick was literally 2 days before pandemic hit, and boom, 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 boom. $100 breakout here after a nice cup and handle, horizontal resistance at a significant hold number. Keep an eye on CarMax above 100.
Mm-hmm. And
The only stock I have we haven't talked about today yet is Apple. They do report here in a couple days, but there was some leaks occur in Apple, guys.
I heard this story.
It looks like August 19th, they're going to be unveiling. This is Apple. Apple does this every year, but they're going to be unveiling on August 19th on iMacs, AirPod Studio, HomePod 2, HomePod Mini. On September 8th, they're going to unveil the new iPhone 12 line, the iPad, the Apple Watch 6, and AirTags. October 27th, they're going to unveil the new Apple MacBook, the MacBook 13 Pro, the iPad Pro, and Apple TV 4K. It looks like Apple's got a busy next couple months, guys.
Dude, yeah, they do have a busy couple months. Who was it that hacked them that got this information? I saw
it's the same. Like there's two organizations that constantly leak Apple news. I'm sorry, I can't remember They got some weird names. I can't remember who did it though. There
Could
were
you
two
imagine-
organizations that do it.
So their claim to fame is that they are the Apple hackers, and they just want to know when the products are coming out. Is that right? Like
That's
it
it.
seems like an odd way to build just spend your time, but I guess it's good for Apple investors kind of know what to
We're talking
expect.
about the
coming down
number
pipeline.
one. We're talking about the number one company in the U.S. We're talking about the number one brand in the U.S. We're talking about Apple lovers. Apple lovers, although not as vocally, passionate as Elon lovers,
Sure.
they are there too, though. They are there too. You say something bad about Disney to my wife, it's like calling her kid ugly. You say something bad about Apple, you're questioning her brand awareness. Like,
That's a good question. What brand or company would you defend the most? Would trigger you?
great question. Halftime crew. What company, if somebody said something negative about the company, you would be personally offended at? And that's insane to think about because it's a company that doesn't know who you are, but we all have them.
Yeah.
Every one of us have them, right? I have them, you have them. So what company would you personally be offended by if somebody said something negative about it?
Dude, Ford trucks.
You don't even own a Ford truck.
I got a Ford Expedition for sure. And Dad always drove a Ford. I've always had this affinity towards Ford. Do not mess with my Fords. Absolutely not.
Tiago, that a boy.
Tackle trading. That's my man.
That's right. AMD, I can get that one. Thon, Amazon, Tesla. No, Tesla, SpaceX, a lot of Tesla.
Dude, look at our
Dina's
team
like
tackle.
Dina's like none. I am a capitalist. I love burritos when they make me money. I love Disney when they make me money. Dina, I love Dina. Just capitalist, great trader, doesn't care at all. They make me money. I love them. They don't. I hate them. Dina.
So basically, I offend 10% of our audience every time I say something negative about Tesla. Is that what I'm
Mark,
hearing
you
here?
say you offend 10% of the human population every time you speak. Yes.
Listen,
I offend
I
at
don't-
least 20% of the human
I like
population.
Dina's answer. I think you should be Boba Fett when it comes to stocks. No allegiance.
Brian, is that true, Lulu?
Dude, he loves him some yoga pants.
Dude,
Listen, I my favorite hoodie is Lulu. It's my favorite hoodie by far. I wear it all the time. It is so comfortable. I love it.
I'm not seeing apparel companies in here besides that though. No Nikes. I
I don't think Brian loves Lulu. I'm calling nonsense.
Yeah.
I think he's trolling. I think Brian's trolling. What company are you, T? No. Let's play the game. Mark, what company would Tim be offended at if you said something negative about the company?
Well, I see. I know how to get Tim is go at Bernie Sanders. I don't know about a company, man. Like, see, Tim likes his momentum stuff.
Tim's a nihilist. He doesn't have those emotions.
Yeah,
you guys are missing the obvious one. What story do I bring up at least once a week when they sign some new person to their platform?
Spotify?
Absolutely. You talk trash on Spotify, I'm probably going.
Well, let's have a little conversation about valuation.
It's about the future, man. Come on.
It's about the future. It's about what about you, Mark?
USO, a product that I've been banned from talking about.
Well, you've been banned because it doesn't track oil.
Not a company.
It does track oil. See, it's my trigger. It is.
It's not a company.
It's not a company.
Dude.
By the way, that is a good answer.
You're talking about like an umbrella company that has no revenue here.
I like USO. Screw y'all.
Well,
I would use more graphic language if we didn't have such a fine group of individuals watching us.
You've been banned from talking USO because USO is not an accurate tradable instrument.
No, because I'm tired of explaining it to you creeps.
No, because you've lost the argument and you're not willing to articulate on that. Okay. Tim, we're not going to regurgitate this, but Tim, who won that argument on USO? And be honest.
USO is a non-tradable instrument for people, for sure. Matt won that argument. That's my opinion.
That it's a non-tradable instrument. You know who won the argument? Robin. You know who won the USO argument? Millions of Robinhood traders who piled in at the lows. won the argument.
Yeah, they've been winning the argument for months. That doesn't.
Fair enough. They've been
doesn't
winning every argument.
That's right.
So
back on the
Robinhood,
conversation.
That's the argument. Robinhood piled into USO and it's underperformed crude
I know
oil.
everyone that piled into
this debate.
everyone that piled in the lows made money on it.
We're not rehashing this debate here. We can do it on the podcast. I do want to get Matt's answer though, and I think I would know what it is. If people talk trash about AMD, Matt, you would defend it to the death.
Matt loves AMD.
I love AMD.
Yeah. It used to be US Steel, by the way. I'm not sure you would defend that.
No. I never loved that. I love that little company, but that company has a very volatile history. If people are anti-US Steel, that's fine.
James has a good answer. Mark, Micron. If somebody talked trash on Micron,
that was 2 years ago.
If you talk trash about the that's true, because I think their CEO is amazing.
Mm-hmm.
So if you talk trash about the company management of Micron, I would say something salty.
Yeah. AMD for me, but I don't know if there's a company in the market that I'm so passionately about that I couldn't see the flaws.
Mm-hmm.
I don't think the company in the market.
There's a lot of chatter. They come out with a good earnings report in the next 24 hours. You get a breakout of existing levels, man. AMD is the type of stock that can freaking take off. In a year where when things take off, man, the momentum can be relentless.
AMD can fly.
Mm-hmm.
AMD.
But I don't love AMD for that reason. I love AMD because I love the product.
By the way, Marquise has a really good point. I want to bring it up. I didn't talk to you about this yet, Marquis, but the story I'm seeing more and more and more from these Robinhood traders, and this is happening literally on a daily basis in forums I track. Well, I lost all my gains. Well, my account's back down to nothing.
Well, okay, because
right?
Let's just look at the market over the last 2 weeks, right? It's been a great market for me. My theta just bleeding off. You know what? It hasn't been a great market for out of the money options. Hasn't been a tremendously great market for options in general, as that volatility spikes bleeding off, especially for weekly options or 2 week out options. And so these really aggressive pound out of the money options, they've been getting taken to school over the last couple weeks.
Hold on real quick. Ty B, I'm a very positive person, but I'm going to do something right now just to troll you a little bit. Everybody, Team Tackle, can you just type the word gold in the chat for me real quick? Everybody,
we're not going to stop talking gold. We're not going to happen.
Mark, somebody says, can you stop talking about gold? Or can you stop saying the word gold?
No.
No.
Gold.
We are not going to do that.
You should write it on your wall in big crayons. No, gold.
Yeah, gold. All right. Matt, podcast dropped yesterday. Promote it as we kind of wrap up our show here if you can.
Listen, if there's one community you don't want to say something negative about gold, it probably is tackle trading.
A lot of people made their portfolio.
A lot of people made a lot of money on gold.
Yeah.
That's probably the one instrument. If we're going to instrument that I'd be like, get the hell out of here. I'm not listening to you. Like, shut your mouth.
It's gold.
Say something negative about gold ownership.
Yeah.
Hey, listen,
call it a pet rock. See what happens. Call it a pet rock.
A pet rock, huh? Did you pet rock as a kid or something, Matt? Because this has come up a couple times with you. Is this some trigger?
Warren Buffett called it a pet rock one time.
Oh, is that what he did? I didn't know that.
Plus, if you ever want a fascinating entrepreneurial story, go read about the man who came up with the pet rock in the 70s, his entrepreneurial thing, and how much money he made on that.
Yeah.
If you want to know an inspirational story about a guy taking, it's a great story. I'd advise anyone to go Google it. I just have two thoughts before Matt does the podcast and you take us out. One, two Indian schoolgirls have discovered an asteroid heading towards Earth. It's supposed to hit here in like 1 million years or something. But hey, clock's ticking.
So two young astronomers, huh?
Two young astronomers.
That's cool.
It reminded me, what was that show where the guy discovered the asteroid and then Was it Deep Impact or
Well,
was
they had
that
two that came out in
Armageddon?
the same year. That, I mean, Hollywood used to have a playbook where literally somebody would
did.
pitch something and you'd have the same theme of a movie, like in two different production units. Deep Impact was not as good, by the way, as Armageddon, though.
No,
Armageddon
you
was a
listen, you listen.
much better movie.
I don't care about companies. You say something bad about Tia Leone, you're gonna get some words with me. All
Nobody
right.
say anything bad about Tia Leone, but
I
Armageddon is
love
by far
Tia
the
Leone.
superior movie
I
of them.
love her. Listen, Madam Secretary, you can call me up anytime.
Listen, I'm about ready to sing Aerosmith.
Final
it on.
thought is, listen, we've had a lot of smart people give caution to individuals when it comes to their long-term portfolios. And we've had Paul Krugman, Nobel Prize winning economist, say there's mania in the stock market as investors fear missing out. He says that some traders have yet to grasp the extent of the economic harm that has been done by the pandemic. His exact quote was, "It's very hard to escape the sense that there's mania now, and this is a FOMO," using the phrase, market. And so Krugman calling it a FOMO market. Just be careful with your investments. We still traded the upside. The trends are still clear. As investors, be careful. Now, in a retort to Krugman, Johnny from the message board said, "Yo, bro, you're old and don't get it. This time is different." So
Those
which side of
message
the
boards,
argument
kids.
do you want your portfolio to be on?
Right. Fair enough. No, love it. Thank you for making sure we got those out there, Mark. And I think it's very, very, very prudent advice as well from Paul Krugman. Maddie, podcast yesterday. I just kind of promote that, and then we're going to wrap this show.
Yeah, we did. Tim, is it time we get Mark's picture on here? Is it like?
I agree.
Is he? Are you
First of all,
committed?
no,
Are
no,
you pot
listen.
committed here?
I'm pot committed emotionally, but you guys know I'm an introvert. I don't like that
That's why
shit.
I asked.
Like,
That's why I asked.
Listen, so if you want to put a picture of like, yo, Max loss or something, I just don't like that. I would like, it's uncomfortable for me to do this show. I just pretend there's no one there. That's why I never look at chat, right? I just pretend it's here, us chatting, and there's like 4 dudes in a bar somewhere in like, Montana watching us, and we're just having a good old boy, country boy conversation. That's how I deal with this. So.
I think we need to get his picture up there. Maybe a Max loss.
No. We're thinking like a cartoon character of Max Loss. Cigarette smoking, angry old man.
As long as he's flipping you off and smoking a cigarette.
Angry old man, get off my lawn type
I
moment.
Can deal with that.
Actually, we need a picture, a character of Mark smoking a cigarette, watering his lawn, pointing at somebody on the street that we can randomly just assume it's some kid. He's yelling, "Get off my lawn."
No, I do that.
We need that.
Day.
He could get on that one. He can get on that. Karaoke singing would also work there. Yosemite Sam, Chris, halftime crew. Let's start coming up with some ideas that Mark could look at as a character that we could put on the podcast. I like that. But no, we dropped a new podcast last night, Trading Justice 383 in the books. We had a prolonged conversation, obviously, with all the news that's happening this week. We also walked through the 7 steps to trading. We haven't done that in quite some time. So we had a lengthy conversation on the individual components of the 7-step guide to trading. Talked about what they are, why we go through that process. We talked about order entry. I think it's going to be really, really, really good for beginner level traders to kind of hear the mindset behind some of those processes that are in the 7-step guide to trading. And for those of you that are, veterans, a little bit of a review, obviously, but definitely download. And we constantly get asked how to support the podcast. Obviously, we don't do any marketing on it or anything like that. It's just something we do for our community. And the number one way you can support the podcast is going to iTunes and leaving us a nice little 5-star review. And as always, if you don't love the podcast, we still love the 5-star review because you guys are amazing and we love you. It just helps us with the every podcast says this, but it really does help you with the Apple iTunes algorithms in terms of visibility and whatnot. So we do appreciate those reviews on the podcast, and hopefully you guys enjoy it.
Absolutely. And as always, click that download button on your podcast app as well. Make sure you're getting it each and every Monday night when we put that out. We do one each and every week. So have some fun with that. 7 Steps Trading. It's great for a beginner. If you're out there and you're like, okay, I know somebody that needs to learn how to do this, I would point them towards either this podcast or that free trading course over on tackletrading.com. Guys, that's it for our show here today. Again, celebrate the 10K mark.
Last
Now we're
note,
moving forward. Go ahead,
Last
Mark.
note, we have a coaches show tonight for our pro members. The great Tyler Craig and Gino Poor will be there to be discussing market action and everything out of them. To experienced guys, a lot of insight.
The two most likable guys at Tackle
Yes,
Trading.
we have our likable coach. I mean,
Yeah.
listen, we got a great bunch. It's hard. There's a lot of likable guys, but Tyler, Gino, it's going to be a great show for pro members tonight.
Looking forward to it. And if you're not a pro member yet, as always, every time we do this show, we promote it. We got a 15-day trial. There's a link in the comments below. Just go ahead, sign up, come and join us, see what it's all about. There's nothing really you can lose from that to come and give that a try. Guys, we'll be back tomorrow with another halftime report. Until then, we'll see you then.